Hi, this is Mac with PriceActionTradingSystem.com. Today is Tuesday, September the 11th. Um, we had a fairly nice trend today, so hopefully you can you had a chance to make some money. Notice that I only marked trades through about noontime because the volume just really died after about lunchtime. It really died in here about 10:30. Um, and you could have worked this either way, two different ways today. I had this trend line coming off these first two bars, and you can see it came into play. Then we broke the trend line, and then we've had a two-legged correction so far. But you also could have looked at this as a spike in channel. There's the big spike up, and then we went into the channel, and you can see the channel's holding nicely. And this upper channel line is just a clone or copy of this lower line. And so you could have played it either way. But for whatever reason, after about, right after about 10:30, 11 o'clock, the volume just died. And you can see the market opened right down in here. And so from 8:30 to, I'd say 11 o'clock, you notice all the bars we got. But then from about 11:30 to 2:30, we just don't have that many bars anymore. So for whatever reason, the volume just died off. And most of your trading was happening this morning and just not much happening in the afternoon. So I didn't mark much. There's no real good trade set up in here because you got this channel line. And I wasn't sure which one of them was going to be right. Was it the spike in channel, or was this channel line in play here? And or this trend line right here, was it in play? And it looks like this trend line was in play for the most part, because we had the break here, we had a move to a new high, a couple of legs up, and then we've had at least a two-legged correction that lasted most of the rest of the day. And we're still we're really in kind of a channel, working our way down. Let's just see if I got it right there. Yeah, I'm pretty close right there. You can see that channel right there that we're kind of working down now. But let's go back and talk about the trades we did see. And really we had this kind of a trading range from about 5:30 to the open right here. But when we pulled back to this trend line and tested it here, and you've got a two-legged move, hopefully you can see that. You've got one leg here, then you got a correction, and then you got another leg. And this is really almost a perfect measured move. So this was a great entry right here. And it took it a little bit to work out, but as long as you had your stop below the signal bar, and you just about, let me explain that. Some people, I get a lot of questions about this. And if you're wrong on a trade, it's best to exit that trade. However, if you get in a trade like this and you're catching the lows, you definitely have to keep your stop below the signal bar almost always to survive. If it goes much lower than that, then the trade's questionable and you probably want to exit. But if you keep your stops too close, you're going to get stopped out just on noise. And that's what I call all this movement up and down here, noise. And eventually the market did take off, and that was a great move up. And I was hesitant to enter here because this is all this overlap, but it's near the lows of a double bottom. And we've got a one tick break lower that created a trap. So for that reason, I did enter this trade right here. And it got its 5 ticks, and it backed up and took out my break-even stop. But I just re-entered right here when we made this little 2-bar low, and this is really a failed second entry short that turned into a second entry long, counting off the bottom. And so this was a great entry, and there's enough room to scalp out before getting back up here to these highs. It's tight, but there's enough room. And it didn't matter because prices just went higher. And this time any runners were easily safe. So it was really very easy. And this right here, if you look at it closely, is just a repeat. It's a repeat pattern of this setup right here. Notice that you got your low, and this is a second entry long, so you could have entered here. It wasn't the greatest setup, but it wasn't a bad setup because you got a double bottom, you got a failed break lower. It's a second entry long. It's a small doji. You really would like your doji to be smaller so you can enter closer to the trend line, but that's not too bad. And again, you had to keep your stop below the signal bar, because if you moved it and tightened it, you got stopped out instantly. And you might have gotten shaken out of this one anyway, because generally when you enter a trade right here and it doesn't take off, that's not a good sign. So it probably wouldn't have been a bad idea when one of these bars bounced back up here and was willing, it gives you a tick to get out, so you get out with a tick. Probably wasn't a bad idea to exit that trade. And then again, you got a chance to re-enter right here when we ticked lower. Now notice this is a failed second entry short. Let me make this bigger so you can see that. And it's a little bit before the market closed, so of course prices are bouncing around in there right now. That's my price line, and it's just kind of getting in the way there. But notice as we had this low, you got a first entry, pull back, a second entry, and then actually I'm counting that the wrong way. You got a new low, then your first entry short, and then your second entry short. And notice how it failed. So basically what happened was prices came back and tested this area twice and failed, and then went higher. So you got a trap here. You got a short trap, and you got a double test, which is usually good to go the other way. So that was enough reason to enter this, even though you're in all this traffic here. If you didn't enter that, probably wasn't a bad idea, because it's really suspect most of the times entering in all this traffic. And if you were looking at the trading, at this possibly being a spike in channel, we were coming off the top but hadn't reached the bottom yet, so that makes this risky too. But that's why I'm leaning more towards this was not a spike in channel, but it was really just a trend line working up through here that we broke, and then now you can see we're still trending lower. So I'm leaning more towards my original thoughts of this trend line right here. And this is kind of a what I call a wedge shape, and it's usually a reversal type pattern, and so far it's living up to that. So but anyway, both of these trades, this was not a bad entry. This one was really more suspect, but it was the first break of the trend line. It's a failed second entry short. Prices were all above the EMA. The EMA is still pointing up. So if you took this was a good setup. And again, on this one, your runners were probably safe too, unless you got shaken out up here before you got your 5 ticks, and that could have happened. And if you did, then it was probably the right move. But prices continued on higher and came up here and made a new high, and then sold off. So, but you got to remember, you're looking for a long on even after your first break of your trend line. And but some of you may not have seen this. You might have been looking more at this channel that's coming up through here, and if that were, if it was indeed a channel, then you wanted prices to come back and touch before entering. So but I still believe that this is your trend line. I'm looking at this line. Yeah. Right up through here, and I can't get it all on there now. I've got it too broad, but let me narrow it down some for you. But you can see that I drew it off these first couple of swings down here, and I still can't quite get it in there. If you draw it off those first couple of swings, like I did right there, and it caught these, and then you had your break, and then you moved to a new high, and then now you're selling off. So that's what I was looking at for the day. And it really wasn't even clear that we weren't in a trading range. This was a small trading range, but you couldn't ignore this trend line, and coming off of it twice especially. You might have ignored it this time, but you couldn't ignore it when we hit it again right here. So, and I still don't quite have that right. There you go. It's a little better. But the next trade was up here, and I drew a green circle here because if you saw this was not a bad short at all, but it's counter trend trading to a degree. But we did have the trend line break, and we did have 2 legs up to we really had 3 legs. 1 leg pull back, 2 legs pull back, 3 legs. So we really had our move to a new high, and we got a really bullish bar that couldn't go any higher. It closed on its high, and then we sold off from there. So you could have gone short right here if you saw this. Again, I've got it marked in green, and that just says that if you noticed it and took it, it was a fairly decent setup. But you know, the best bet is to ignore these because it's a counter trend trade, and being that far away from the EMA that long after making a new high, I like this setup, and it turned out to be a very easy one. I had somebody contact me. I think I had a couple of people that asked me about this short right here. And this is a second entry short. You got one leg, a little pullback, and a second entry short. But you don't want to go short out of this stuff right here, especially because this is at a low. And you could have your line coming across here because that was your former highs. You see that right across there. So this is just not a good short at all, and you're getting shorted at a low basically because here's all your pullback, and then you went into a little congestion and then you tried to go lower, but all that did was trap people. But you don't want to go long here either because there's no show of bullishness there. This is the first show of bullishness. So once it came back, you could have entered here, and you definitely should have entered here because, again, this is a repeat pattern. This whole pattern here looks just like this one and almost just like that one. And basically what you got is another failed second entry short. Look at this. Here's your new low, first entry short, pull back, second entry short, and it failed. And so you caught people trapped to the short side right there, so you could have gone long. And it took it a minute to work out. But you also could have gone long here because you got a double bottom, and you've had a little bit of show of bullishness. So, and this is a reversal type bar that closed almost on its high. So this was not necessarily a bad setup here. Again, you had to keep your stop below the signal bar, and that's why I teach it that way, because if you start tightening it too soon, most of the time you're just going to get stopped out, and you're not going to give yourself the chance to make any money. And you know, we've proven this over and over again. You know, I've experimented with this, run tests on it and everything, and we found the best way to do it, if you're reading the price action correctly, is to always put your stop 2 ticks below the signal bar. And if it takes more than 2 points to do that, then either try to sneak in early. In other words, when this ticks up here, don't have your stop here. Let it tick up there and prove itself, and then come back here and drop a limit order in here so you can get in enough to get below this bar with 2 ticks. And you could have, and you see that would have worked if you'd have done that. You could have actually gotten in, putting your limit order right here, and then you got a 1, 2, 3 tick stop to work with, and that's as good as it. So anyway, sorry I had an interruption there. Your best bet is to always put your stop a tick or two below your signal bar. Now, a lot of times, if on the best trades like this one right here, actually on this one I think it ticked up and pulled back, so you still could have gotten in, but sometimes prices will just rocket off like right here, and by trying to sneak in like that and get a better entry, you're going to get left behind. So you know, only do that if you think you don't have enough room to keep your stop under 2 points. We don't want to be trading with a bigger stop than 2 points. So if you can get in a trade by entering above, or if you're going short below the signal bar and still have a 2 point stop, then that's the way I recommend doing it. But if you can't, you can either have to skip the trade or drop a limit order in, and this is a good example right here. By entering way up here, it takes 1, 2, 3, 4, 5, 6. You still could have gotten in that one without any problem. You still could have used an 8 point stop. And I like to actually keep a 2 tick stop below my signal bar, because a lot of times what happens is prices will tick back, just like right here, a single tick. See how that price has ticked 1 tick lower and then 1 higher again. Prices are, I mean, they are, in the ES they do that often, just like right here. If you entered right here on this bar and you had your stop 1 tick below this bar, you got stopped out just before prices went higher. But look what would have happened if you had a 2 tick stop. You would have survived that, and you wouldn't have got trapped out, and you would have survived to ride that up. And same thing. See, well, this one came back one stop. But if you tighten your stop, notice what would happen. It would have come back one stop and got you before prices finally moved forward. So anyway, the moral of the story is, try to enter with no more than a 2-point stop. And if you can't do that, then you got to you got to get creative and try to sneak in a little bit late with a limit order at a lower spot or something. And then again, at least one tick below your signal bar, but hopefully 2 ticks if you can get it there without going over 2 points. So by doing that, you're going to give yourself a lot better chance to make money. You're not going to get stopped out on the noise, because that will happen to you if you keep your stops too tight, which is a smart thing to do. You don't want to give, when you're wrong, you don't want to give up a lot of money, but you can't keep your stops so tight that you get stopped out just before prices go where you were expecting them to go, and that will happen to you quite often trying to keep your stops too tight. So, but anyway, I'm going to wrap it up. We'll do this again tomorrow. This is Mac with PriceActionTradingSystem.com. Hope you had a great trading day and a better one tomorrow, and we'll see you then.